And welcome back. There's a lot of misinformation out there regarding these new fees that go into effect on May 1st this year, imposed by Freddie Mac and Fannie Mae. So for those looking to buy a house right now, there's some misinformation out there that if you have a lower credit score and also a lower loan to value ratio here, you're actually going to pay less compared to someone who has a high credit score. And that's simply not accurate here. So I actually found a really good article according to the National Association of Home Builders to kind of provide some more context and some clarification regarding these new fees that go into effect on May 1st. So they say the following here. In January, the Federal Housing Finance Agency, or the FHFA, which by the way, they actually govern Fannie Mae and Freddie Mac, or the enterprises, they announced a new pricing framework for single-family home loans eligible for purchases by Fannie Mae and Freddie Mac that will lower mortgage fees for some borrowers and raise fees for others. The revised fees are scheduled to take effect on May 1st this year. So recent press articles are stating that in many cases, borrowers with lower credit scores and higher loan-to-value ratios will pay lower fees than borrowers with high credit scores and low loan-to-values. This is not accurate. The truth is, while the fees for some borrowers with high credit scores will increase, those borrowers with higher credit scores will pay less for their mortgage loans than borrowers with lower credit scores. So don't take their word for it. Take a look at this. Here is, according to the Morris News Daily, they just posted this on the 21st of April, last Friday. And they talk about these fees, which by the way are loan level price adjustments, or LLPAs, imposed by Freddie Mac and of course Fannie Mae. So LLPAs are based on loan features such as your credit score and of course your loan to value ratio, among other things. So if you're looking to buy a house, here are the increases in fees by credit score and also by loan to value ratios here. So areas here shaded in red is an increase in fees, and the green shaded areas are decreases in fees. So when looking at this at face value, it appears people who have credit scores of over 700 appear to have a higher fees compared to people looking to buy a house for credit scores of less than 700. That's simply not accurate though, because this is the changes in the fees, not the actual fees themselves. Instead, here are the actual fees imposed by credit score and of course loan to value ratios as well. So for example, someone with a 740 credit score right there, with a 80% loan to value ratio, your payment, or not your payment, your fee would be 0.875% of your loan amount. Compare this to someone with a FICO score of 640, also with an 80% loan to value ratio, their fee would be 2.25%. And the difference between those two percentages of 2.25% and 0.875 is a difference of 1.375%. This means for a home buyer looking to buy a house using a $300,000 loan, you're going to pay approximately $4,000 more for that loan if you have a 640 credit score versus a 740. So here's the math on that. Multiply this by $300,000 for your $300,000 loan. That means you're going to have to pay $4,125 more if you have a 640 credit score versus a 740. So big picture here, even though the fees have increased for people in general with higher credit scores, and also fees have decreased for people with lower credit scores, still the people with credit scores in the 600s are still going to be paying more for those fees than people with credit scores over 700 in general. All right, changing gears slightly here. Let's go back to the National Association of Home Builders report here. It says here, lowering fees for low to moderate income borrowers and first-time home buyers is a positive step for making homeownership more affordable and attainable. However, the Home Builders Association opposes the changes in the new pricing framework that raises fees on borrowers with higher credit quality. The Federal Housing Finance Agency, or the FHFA, also released a statement on the 25th of April here. They say here that higher credit score borrowers are not being charged more so that lower credit score borrowers can pay less. The updated fees, as was true in prior fees, generally increase as credit scores decrease for any given level of down payment. As you can see right here, the higher the fee, the lower the credit score. Also, the new framework does not provide incentives for a borrower to make a lower down payment to benefit lower fees. Borrowers making a down payment smaller than 20% of the home's value typically pay mortgage insurance premiums, so these must be added to the fees charged by the enterprises or Fannie Mae and Freddie Mac when considering a borrower's total cost. Also, according to the National Association of Home Builders, they said at a time when housing affordability is creating a significant barrier to homeownership, the association believes that FHFA should lower fees to help all home buyers. We will encourage FHFA and the enterprises to reconsider the rollout of those fees and whether there is a better way to accomplish their goals. Now, this is something that I do not agree with them regarding this, because if they were to lower fees for all home buyers, what would happen? Let's just say they lower fees greatly. That could actually cause demand to increase, which would actually cause home prices to increase as well, which of course would make housing affordability even worse than it is right now. So having said that, what can we do in order to make housing more affordable again? I've been talking about this on the channel for, 2+ years, because I got really sick of talking about the housing market back in 2020, 2021, and 2022, at least for the first half of 2022, where it seemed every single month we had an increase of home prices and, of course, a huge decrease of housing inventory, reaching all-time record lows for some months. So I was really actually impacted by this, because a lot of people who subscribe to my channel talk about how they want to realize their dreams of buying a house. But back over the past couple of years, it's being very, very challenging for people, especially first-time home buyers. So I just want to throw that out. I'm all for making housing more affordable, because it's a very, very big issue across the United States. So what can be done in order to make housing more affordable? There's two main things on the demand and supply side here. So number one, we could decrease demand and or increase supply. In other words, increase the number of houses for sale. Let's first talk about a decrease in demand and what that would look like. So programs that help buyers now could have the impact of making housing affordability worse in the long run. So for example, incentivizing people to buy houses today would likely increase home buying demand, which would likely cause home prices to rise further, making housing affordability even worse than it is today. In contrast, in general, decreasing demand could have the indirect effect of increasing housing inventory. Of course, as we would see fewer home sales, and of course, houses would take longer to sell, which would likely increase housing inventory. And that increase of housing inventory would put downward pressure on home prices, making housing more affordable again. So that's the demand side of the equation here, but let's talk about the supply side here. So in other words, in order to make housing more affordable, we need an increase of housing inventory. And number one here, which is a fairly, not easy one, but a fairly easy one to point out, is we need more houses to be built. So for example, housing starts over the past 15 years have been well below historical averages. In other words, we have underbuilding over the past 15 years. So for example, single-family housing starts, and by the way, a housing start is the beginning phase in the construction of building a brand new single-family house. So single-family housing starts dropped to an all-time record low in early 2009 for data that goes back all the way until 1960. This is also well below the previous record low that was set back in 1981. So for example, according to our good Uncle Fred here, back in March of 2009, there was only 353,000 housing starts for single-family houses. That was an all-time record low going all the way back until 1960. The previous all-time record low was set back in 1981, when at that time there was 538,000. Also, when I zoom in here, starting in 1990, you can clearly see we have far more housing starts in the 1990s through the early 2000s than we did over the past 15 years. We saw, of course, a huge fallout of housing starts after the Great Recession here. It bottomed out in 2009. It slowly has been increasing, but not nearly the same levels we saw back in the 1990s, for example. So starting in the early 1990s, for the most part, we have over 1 million single-family housing starts. For the most part, over 1 million each and every month through 2007. But after that, we didn't get over 1 million housing starts until December of 2019. Here's a key point I want to make here, because new houses built today are the existing houses for sale in the future. So for example, a decrease of new home construction from years past is causing existing housing inventory to remain at historically low levels. So for example, when looking at existing housing inventory according to the National Association of Realtors versus new single-family housing starts according to the US Census Bureau, we saw a dip of existing houses for sale starting around 2012, which coincides with a huge decrease of housing starts starting around 2007. Regarding housing starts, again, a huge decrease starting in 2007, which went through 2009. And of course, the current levels over the past 10 years or so are well below the 1990s, for example. And this also coincides with huge decrease of existing houses for sale starting around 2012. And ever since then, we have seen this ebb and flow of inventory each and every year. But overall, we've been seeing this downward trend ever since 2012. And again, this is likely due to the fact we have underbuilding across the United States over the past 15 years. With that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate you. Hope you have an awesome day. I'll see you on the next video.